April's 16% plunge. Most sectors reported July gains. Now, even with the rebound, heavy industry is running at a slower pace than before the coronavirus erupted, and spare factory capacity can weigh on business profits. Vinny Dell, Judice, Bloomberg Radio.
Shale explorers park more drilling rigs in the U.S. this week as stagnant oil prices push the industry to extend a historic retrenchment. The number of active oil rigs in U.S. fields fell by 4 to 172. This is according to the weekly numbers from Baker Hughes. That is the lowest level of activity since before the shale boom kicked off more than a decade ago. Checking some of the oil names, ExxonMobil, little changed, up 2 cents right now, higher by less than 0.1%. BP is down 2.3%. EOG Resources up 0.2%. Pioneer Natural Resources trading higher now by just about 0.3%. So it is a lower day now on Wall Street. The Dow, the S&P, and NASDAQ all declining. Do have an IPO to tell you about, a couple today, but Duck Creek Technologies, software provider for insurers, its shares surging first day out, up now by 42.3%. S&P down 4. That's a drop of 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Paul Sweeney and Alex Steele sitting in for Carol and Jason today. We're going to take a look at some economic data. We had a pretty busy week, as it seems like most weeks are busy. We had the retail sales retail sales today, jobs claims yesterday. Let's dig into some of those numbers and maybe look ahead a little bit. Yelena Shulyatyeva, senior U.S. economist for Bloomberg Economics, she joins us. So, Yelena, let's start with those retail sales today. Still growing, but they slowed pretty significantly in July. As you think about your outlook, your models, how concerned are you about that?
I'm concerned about what happens in August, actually, because this is a back-to-school month, and what happens in August could tell us a little bit about what happens in November, December during the holiday season. So are consumers concerned about their incomes? Are they ready to spend? So I think August will be a big test for consumers and in terms of retail sales. Yes, the pace of retail sales is slowing, but that's natural because it was a large rebound right in the beginning of the recovery, and it slows down. So that's not a big concern. The big concern to me is what happens next, what happens in August, what happens towards the end of the year.
Which is such a good point. I think you make a distinction between a rebound and recovery. Like, we're obviously going to have a rebound from where we were, but a recovery looks very different. And so I'm wondering how much of the government stimulus or lack thereof will play into that. Because on the flip side, some people have been saving a lot of the money, so the savings rates are higher, right? But
it surged.
It surged. But will anyone actually spend any money?
Well, it will depend on how uncertain things are. And right now, the cloud of uncertainty surrounding the outlook, and I'm speaking like the Fed policymakers' language, and it's definitely not being helped by the delay in stimulus package. The executive orders were fine. It's better than nothing, but obviously a bipartisan deal on a stimulus, that would be much more needed going forward, and we're probably not going to hear anything until September 8th.
Yelena, this is also a presidential election year, and it's kind of getting pushed to the back burner relative to the pandemic here, but I know historically, that's something that economists really focus on, market strategists really focus on because of the impact, obviously, on the macro economy from different administrations. How are you guys thinking about a potential for not only a Biden administration, but maybe even a Democratic Senate as well?
So, yeah, absolutely. So the election season is getting into a higher gear right now with the convention starting on Monday. And the way we think about it is, obviously, the presidential election will get a lot of attention, but what will probably matter more for the markets and for the economy is what happens at the congressional level. So if we get a unified, presidential ticket and Congress, we will probably see a little bit easier, stimulus spending and things that could help economy. So the concern here is a divided Congress again that could stall any further progress. I think what's important to remember, it's the year that will see the economy coming out of a recession, and we will see, expansionary policy one way or another. It will depend on whether it's taxes, lower taxes, or whether it's bigger spending.
Paul, have you been shopping?
Not a big shopper, but I have noticed the credit card bills are lower. Absolutely.
Yeah. Elena, how about you?
Well, I've been shopping, but not for back to school. My toddler is still too small, and perhaps he's not going to daycare either.
Yeah, no, I definitely have not been shopping back to school. The other data point that I thought was interesting we got out was UMISH. I know it's Janet Yellen's sort of desert indicator. Like if you were in a desert island, like what would you like to have with you? What I found interesting was the rise in inflation expectations. How did you interpret that?
I mean, it's just probably gasoline prices of some sort and maybe a rebound from the previous months. I think I don't believe in
That's not your desert island
hyperinflation
indicator,
story or inflation really becoming a concern anytime soon. We might see, some spikes in the data here and there. The data are volatile and they're still rebounding from the previous declines. But I think the lack of aggregate demand will just weigh on inflation, and it's not going to become a concern anytime soon.
So, Leanne, where is the Bloomberg economics team GDP outlook right now?
So we expect a sharp rebound, obviously, in the third quarter. But for the year as a whole, we expect a 6.4% decline, which is a very significant decline in terms of compared to any point in history, in modern history in particular.
Since we don't really have clarity on what all the data means as we get it, what do you look for? Like, what's your desert island indicator right now?
Well, I would say, we have to, not even jobless claims. Claims will probably decline a little bit, just simply because, people are disincentivized from applying for jobless benefits because they're not getting augmented benefits, at least until the executive orders kick in. I would look at payrolls. I think payrolls is really important. It's always an important indicator, but it becomes even more important. And I'm also watching flows from the labor force and out of the labor market. So a lot of people get discouraged. A lot of people will have to face a dilemma with back to school, whether they need to stay with their kids because some schools are not open for instruction at school. But what happens there? A lot of people are, facing some tough choices.
Yeah, absolutely. So certainly we will follow up on that labor data. We get the high-frequency data once a week on Thursdays, and we always pay attention to that. Elena Shulevseva, senior U.S. economist for Bloomberg Economics. Thank you so much for that. And it's interesting, Alex, it'll be interesting to see when Congress does come back, what urgency did they feel about getting a stimulus package? We're getting some, you could take the glass half full and say, hey, the economy is coming back on its own. Maybe we don't need it.
Well, that's kind of what I was worried about when we got the claims this week. I was like, oh, is this one of those better data's bad data? Because now there's going to be less, fire to go and pass something. So I wonder if we're going to be in that kind of limbo. If something's good, it's actually bad.
Yeah, but you listen to some of the governors, and they say, we need help right away. So we'll see how that plays out. Right now, let's head down to Washington, D.C. We'll get world and national headlines. We'll do that with Nancy Lyons. Nancy.
Thanks, Paul. Lawmakers have left Washington with no stimulus bill in sight. AFL-CIO President Richard Trumka tells Bloomberg he blames Senate Majority Leader Mitch McConnell for the impasse, saying he's failing the leadership test on negotiating.
Instead of going home on vacation, he would have stayed here and negotiated. That's what you do when you negotiate. You talk with one another, you explore positions, you try to find out where people can move. The Democrats signaled that they were willing to go halfway to meet them. And the Republicans just, in essence, thumbed their nose at them.
House Democrats offered to come down $1 trillion on their proposal, but Republican negotiators called that a non-starter. Presumptive Democratic presidential nominee Joe Biden and his running mate Kamala Harris today signed the required documents to receive the party's nomination. The party's convention begins next week. The latest polls are indicating Joe Biden is stretching his lead over Donald Trump. Bloomberg's Amy Morris has the latest numbers.
The latest NPR PBS NewsHour Marist poll finds Biden leading President Trump 53 to 42%, with a margin of error of 3.3%. But a Fox News poll shows the president closing the gap on Biden from a 12-point deficit to only 7 points behind. Still, more than half of those respondents, 54%, say they do not approve of Donald Trump's performance as president. In Washington, I'm Amy Morris, Bloomberg Radio.
When the Republicans hold their national convention the last week of August, President Trump will be featured each of the 4 days. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Boy, somebody at Citigroup is in trouble, Alex. Citigroup is attempting to recover, get this, almost $900 million in mistakenly paid to Revlon lenders who were locked in a bitter fight with the struggling cosmetic giant over a 2016 asset transfer. $900 million. It was a clerical error.
Oopsie. But I wonder what they were trying to write down. Was it like $900? Was it 90 million? Was it 90 cents? Like, what were you writing that all of a sudden it became like $900 million?
Yes.
Apparently, some of it's gotten back. More than half is still, though, uncollected. And I guess it's because some of the lenders don't want to return it because they're saying, look, Revlon was in default, but I still want my money. So that's not good.
Yeah, so I don't know. I mean, it seems like, you know, I'm surprised half haven't paid it back. I mean, these are banks. These are not individuals that are, you know, going off to Vegas or Mexico or something. I mean, these are, you know, banks that do business with Citi, presumably on an ongoing basis. You'd think they'd want to, you know, play nice here, but I guess possessions, 9/10 of the law is what they say.
Can you really go to Vegas and Mexico right now?
Yeah, that's a good point. Well, you know, the casinos are open, by the way, but you know, it looks they're barren. I mean, I was talking to Brian Egger, who covers gaming for Bloomberg Intelligence, and you know, just really the crowds are not coming back. The people really are not coming back.
Yeah, well, that's not surprising necessarily. I do want to point out for Revlon, that loan right now is trading for less than 30 cents on the dollar. And not really good for Revlon, right? I mean, an Estee Lauder overall is that they have a lot of debt.
Yeah.
That's not good. And also,
Revlon,
I don't know if you know this,
Paul.
Paul.
Yeah.
Just makeup lesson for you. So
Please.
it's Revlon, it's Estee Lauder, right? It's just about the eye makeup. You can't do foundations, so you're losing all this business.
Why can't you do foundations?
Because you have masks. Do you know how gross it is when you have like all that makeup come off your mask? It's really gross. It's all about the eyes. So that's not, you know, that's not going to make you cash.
So what do TV reporters do?
Well, funny you should ask. I actually have a mask, and it's a disposable one, and then I just take it on and off and touch up.
All right.
But it's
all
gross.
right. good to hear. And the trials and tribulations of on-air talent. Thank you. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks lower, early gains fade. Let's head right over to the first word breaking news desk for today's afternoon call. Here's Bill Maloney.
And good afternoon, Charlie. That's right. Modest losses for the main U.S. averages today, with the Dow currently down 18 points. S&P's dropped 6, and NASDAQ declines by 51. The U.S. 10-yield at 0.71%. WTI crude futures are little changed. Gold is down 11, and transports gained 75 points. Leaders to the upside in the Dow, Walgreens, Boeing, and Dow Inc., while Travelers and Procter & Gamble led to the downside. After earnings, Applied Materials gained as much as 7.4% to a record, while DraftKings fell as much as 10% after its earnings. Wrapping things up, Tesla gained as much as 3% after upgrades from Bank of America and Morgan Stanley. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Boy, take a look at the airlines. Alex, they were absolutely one of the first industries to feel, the brunt of the economic impact of this coronavirus, just down 90% in terms of passengers flying, and it's just opening up ever so slightly. To get an update, we welcome Helene Becker, Managing Director and Senior Research Analyst. She's at the Cowen Research Group. She's been covering this sector for ages, has great perspective. Helene, thanks so much for joining us. Give us a sense of kind of where we are right now in the nascent recovery for the airline business.
Thanks again for having me. Yeah, so we're better than we thought. We're better than where I thought we'd be at this point in the recovery. I thought we'd be seeing around 400,000 or 500,000 passengers a day, and we're regularly seeing about 700,000.
And what's normal?
Sundays and 2.5 million.
Oh boy. Okay.
Whoa.
Yeah.
Okay.
Yeah, that's
perspective.
yeah.
Perspective.
Yeah, it's not in the league. And the way to think about that 2.5 million, it's about 1 million domestic passengers a day, and then about another, say, 500,000 to 750,000, maybe 500,000 to 700,000 international passengers, and another 500,000 to 700,000 business. If you wanted to separate it out. Otherwise, it's about 60% total domestic and 70% domestic and 30% international. So when you think about, corporate travel being less than 5% right now, and you think about, international being virtually shut down still, you see where you're not going to be able to get back to 2.5 million for a while. I think we'll be stuck in this area until either quarantine rules are lifted, or there are things to do, or cases start to plateau and fall. And then I think people will feel more comfortable about traveling. I expect by the end of the year we'll be at about 1 million. So that's, kind of where we're looking at, 1 million passengers a day for the holidays, as people visit friends and relatives and maybe, try to do some Caribbean travel or Mexico, or maybe some Florida or California if the cases down there start to stabilize. I think that the real, issue is at some point we went from flattening the curve to waiting for a cure. And, it seems like we're still stuck in that, area. And I know this is a horrible disease, and I don't mean to, poo-poo it. But on the other hand, I also feel like we need to get back to life, and we need to figure Oh, go ahead.
Well, I was going to say, but to that point, get back to life, and I don't necessarily disagree with that at all. I'm just wondering how we respond to that new life, in that I take a look at Europe, which was thought to be handling everything much better, and all of a sudden you get these 14-day quarantines from the UK, from different countries, with like a day notice to implement. You have regional lockdowns again coming into the fray. Here in the US, I feel like every other day Cuomo is adding or taking off another state to the New York's 14-day quarantine. If that's the new normal, like psychologically, how do you go anywhere?
You can't. I mean, I think you make an amazingly great point. You can't.
Amazingly
go
great.
anywhere.
I'm going to drop the mic now.
Bear
I'm
case.
done. Bye.
I mean, I say similar things, only not as eloquently. I just find it, amazing that these governors and people in charge think that it's okay to implement these changes on a moment's notice. Because, to your exact point, how do you make plans? You really can, and I think that's what's got people more spooked than the idea of wearing a mask or trying to socially distance. I mean, there's no such thing as being socially distant on board an aircraft. It's just like that's not happening. But it's safe. The air moves vertically, and you wear your mask and you move along. And I think that's fine. But I think Alex had a really good point. Like, how do you travel when you never know what the rules are going to be, and you can't take a week off if you have to quarantine somewhere for 2 weeks before you get there. It just speaks to the fact that we're not going to get, normal travel for a long time. And, I think, we're forecasting 3 to 5 years before we get back to 2019 levels.
Okay.
And, the CARES Act funding runs out on September 30th, and without further stimulus to March of 2021, which is what a lot of the unions have asked for, we're going to see quite a lot of furloughs, and we're going to see a much smaller industry. People who were used to having, service in their markets, especially in smaller towns, are going to find they have none, because, the airlines just can't. This is not an altruistic business. The airlines have to make money, or they're going to just.
All right. So to that end, Helene, 30 seconds. Do we have any airlines that are going to go out of business?
Not in 2021. I mean, 2020, maybe in 2021.
And that's just simply a cash burn situation, right?
Yeah, it's like if you can't, to the earlier point, if you can't make a reservation knowing that when your day comes to travel, you can go, you're not going to do it. And if you're not going to do it, then that's really harmful to the airlines.
Yep. Helene Becker, thanks so much for joining us. We always appreciate the benefit of your experience and your analysis of the space. Managing Director, Senior Research Analyst from Cowen Research Group. And, just looking at the stocks out, down, 50, 60% here. And as Helene was saying, and you said as well, it's tough to see demand come back prior to a vaccine.
Yeah, have you been on a plane yet?
I have not. If I had to, I would, but I'm not going to until things get better or there's a vaccine. But I just don't, the risk-reward just isn't there for me. So if I had to travel, I certainly would, and I feel okay about it. But if I don't have to travel, I am not going to get on a plane.
Well said.
So we'll have to play it by ear. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Thank you so much. We appreciate that. Coming up, it is the time of the day for the Bloomberg Chart of the Day with Bloomberg Stocks editor Dave Wilson. Dave, how are you? Oh, let's go to Charlie Pellet first. We'll do that first. Get all the data first.
Absolutely right about that. Here's what's going on. Of course, Dave Wilson has got that incredible Song of the Day, the SOD, Song of the Day, coming up in just a moment right now. But here's what's going on in markets. Stocks pushing lower for the final hour of trading. Investors digesting reports showing the economic recovery is slowing. Here's where we stand. We've got the S&P close to lows of the day, just about bouncing along the bottom. Been a very choppy session on the S&P. Down 7 now, a drop there of 0.2%. The Dow down 33 points now, a drop there of 0.1%. NASDAQ is down 51, a drop there of just about 0.5%. S&P slumped after fluctuating near records for much of the day. Utilities, healthcare leading today's declines. Dow little change, NASDAQ remaining in the red. American Airlines has started banning so-called valve masks from its aircraft. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and this morning he told us it's a good idea to avoid those kinds of masks in the first place.
One of the principles that's important to understand is you wear a mask more to prevent you from spreading the virus when you're not showing symptoms than you are protecting yourself from other people, from virus being spread from other people. So many of these valves don't really do a good job of stopping the virus particles, the virus droplets that you're breathing out. And so you probably should avoid them if possible.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. First day of trading for Duck Creek Technologies. It's a software provider for insurers. Shares up now by 40%. We've got the 10-year, the yield 0.71%. Gold down 0.6%, 19.41 the ounce. And West Texas Intermediate crude down 0.3%, 42.11 a barrel. Again, recapping, equities lower across the board. S&P down 8, down 0.3. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pellet, thank you so much. You are listening to Bloomberg Business Week.
I don't know. Paul, so you've missed it this week. And
I have.
It's because I don't know anything about pop culture. I didn't. What was the one? There's a Led Zeppelin song yesterday that I didn't get, which apparently offended
Stairway
like the
to
whole
Heaven.
world.
Oh my, Stairway. Where have you been?
This is the point.
Okay,
So it's like,
Alex.
there's no way. I didn't even stand a chance.
All right, Alex, here we go. Now, you know the Beatles, right?
Yes,
You
yes,
know
my
of
husband loves the Beatles.
Okay. Well, you know, all 4 members of the Beatles had solo careers after the band broke up.
Oh.
I mean,
I did know this. I have been
Yes.
to 2 Ringo Starr concerts, by the way.
Okay, Ringo Starr and the All-Star Band? Cool. Okay,
Yes,
so
I have
he's
been.
out, you know, performing when he can. Obviously not now because of the coronavirus. Same with Paul McCartney.
Yep.
You know, we're coming up on the 40th anniversary of John Lennon's death, which was December 1980, and that leaves the artist that performed the song you just heard.
George Harrison?
Congratulations.
There you go.
Oh, I feel like that's a win for me.
Close enough. Anyway,
That's a good
why
one.
that song? Ring out the old, ring in the new. That's what companies are doing when it comes to capital spending. And, you know, I spotted this chart yesterday on Twitter from Nancy Lazar, who's a partner over at Cornerstone Macro. And what she did is put together the amount of money companies spend based on U.S. government data with capital expenditures for technology equipment, software, and research and development. So basically tech and R&D.
Yep.
So when you put the figures together, you find out that in the second quarter, those categories accounted for just over 50% of total capital spending. And of course, the rest, you're talking about buildings, equipment, other than, say, computers and actually media as well. So that was a first. It never happened. You've got data going back to the 1940s on capital spending, and it's the first time that you've seen tech and R&D together at more than half the total. And I actually ran through the numbers and found out that relative to a year ago, spending on technology and R&D rose 1.6%. But if you look at those other categories, down almost 17%. So companies felt like they had to keep spending even as they were cutting back in other areas, presumably because of what was happening to their business with the coronavirus. And, it's just kind of striking because how much time do we spend talking about technology companies are becoming so dominant in the stock market? The big techs, the, Apples and the Microsofts and Amazons of the world. And what you see in this particular bit of economic data is at least some justification for that. And Lazar wrote in the Twitter post that basically technology is going to power an economic expansion that creates jobs, raises productivity, and restrains inflation. You could go a little further, perhaps, and suggest that at the very least, companies focus on the new economy, as she put it, and technology is a big piece of that, shows you why there is so much emphasis on those areas of the stock market. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
That kind of trend towards just greater and greater tech spending, I'll tell you when it really jumped out at me. I mean, it's obviously been a long-term trend, but when Lloyd Blankfein years ago, stated that Goldman Sachs is a technology company, as opposed to an investment bank, and he meant that in the space, in the sense of how much money they were spending on technology, front office and back office.
But I guess what you're seeing right now, at least in the data that we got today, is that productivity jumped higher, unit labor costs jumped higher for a different reason, but it had a weirdly similar result in that a lot of the lower wage workers were furloughed, so their unit labor costs went up, but productivity was super high because there just weren't that many people at work. And I guess you can make an argument that if you invest a lot in technology, I mean, in some ways that's a little capital outlay at the front, and how long does it get to get some payback if you're already doing pretty good with productivity?
Yeah, it's interesting, and it's be interesting to see how the all these trends, productivity trends, capital technology trends, are being and will be impacted by COVID-19 as it continues to ripple through the economy. Bloomberg Stocks editor Dave Wilson, we appreciate the stock of the day, the song of the day, as always, which stumped us. I know some, George Harrison songs, but I didn't know that one, Alex.
It's just sad. I'm just sad. But whatever. I've been to 2 Ringo Starr concerts and 2 Paul McCartney concerts, and I've been to a Beatle convention in Jersey. So wow.
So I'm guessing this is all just going with your husband and
Well, the Beatles convention was like when we first started dating. Now I'd be like, no way, yeah. I'm not going to that. In Jersey, you crazy?
In Jersey, thank you very much. Yeah, back then you were trying to be nice and impress. Totally. I understand. All right now, let's head down to Washington, D.C. We'll get world and national headlines with Nancy Lyons. Nancy.
Thanks, Paul. President Trump says aid to localities remains a top sticking point in passing another financial aid bill. Bloomberg's Irv Chapman has more from Washington.
The president said he's willing to give $105 billion to reopen schools and an unspecified amount to pay essential local employees. But Democrats want more.
They want $1 trillion to go to their friends doing a bad job running certain cities and states that are doing very badly.
The president was asked if Democrats go along with his other spending proposals, would he agree to their demand to support the Postal Service?
I would certainly do that, sure.
Meanwhile, Congress is on vacation, as is the White House Chief of Staff. In Washington, Irv Chapman, Bloomberg Radio.
Manhattan prosecutors say in new court filings that President Trump is not entitled to know the details about a criminal investigation into his business dealings. The filing is in response to Trump's renewed efforts to stop prosecutors from accessing his financial records from his accountant, Mazars. Last month, the Supreme Court rejected Trump's argument that he was immune from all criminal proceedings while in office. Well, the Minister of State for Foreign Affairs for the United Arab Emirates, Anwar Gargash, spoke with Bloomberg about why the country decided to establish diplomatic relations with Israel.
On the bilateral front, this is good for us, and our calculation was on the regional front that this is something that we can actually get something done, which is to do with annexation.
Gargash says the response to the deal has been fantastic. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Well, Alex, you've been talking about it, referencing it. Hedge funds, what are they doing? It is 13F day today. We're getting a sense of what some of these funds are doing. And there's an interesting story on the Bloomberg terminal, and this kind of grabs your attention. Hedge funds disclosed second quarter investments in 13F filings, but the big one is big hedge funds offload tech stakes in the second quarter.
Yeah, I like dissed 13Fs at 2 p.m. and then at 3:45, I'm like, let's talk about 13Fs. But the idea is the individual stocks I care less about. It's more the theme that I find interesting, to your point, that a lot of hedge funds wound up selling tech in the second quarter. And the reason why I find it interesting, because when you look at, say, Robinhood traders, as they are now known,
Yep.
they trade on the Robinhood platform, but they're really day traders and they trade a lot in options. They are the ones that have been calling the market right. And when everyone was selling tech, they were buying it. And then when all of a sudden you see the hedge funds maybe rotate into tech, well, these guys are buying things like airlines and hotels, and they crushed it for it.
Yeah, and the rotation out of tech, and we've saw it a few times over the last month or so. I can remember it lasted a few days. It seemed like, and that was kind of it. I suspect that you're right. These 13Fs are backward looking, and any entry point, I suspect you'll see some of these big hedge funds get back into some of these big cap liquid names. And I think they're probably trading around a lot of what are probably some pretty core positions for them.
Yeah, and it brings up the whole value trade. I mean, the reason why you'd sell tech is because you think it's overvalued and want to go buy something that's valued. But in order for value to outperform consistently, you just need higher yields. And we may get a little jump in yields, but there's going to be a natural cap. That's the problem until you get some kind of sustained recovery. And even if there is a sustained recovery, I don't know. I mean, the central banks to withdraw all that stimulus for really higher yields is going to be tough.
Yeah, tough to do, and so that's a lot of strategists talking about these lower rates for longer. Get used to it, and in that environment, you're looking for some growth here, and these big tech names have been delivering it. So again, I suspect a lot of these big hedge funds have some core positions and a lot of trading around. But we'll pay attention. 13F day on Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. We are on track for a winning week on the S&P 500 index. A third weekly gain, depending on what happens 13 minutes from now. We've got the S&P down 8 right now. That is a drop of just about 0.2%. Stocks have been moving lower in the final hour as Investors Digest report showing the economic recovery slowed. The Dow down 41 points, giving up earlier gains, down now by about 0.2%. And NASDAQ is down 50, another 50, falling 0.5%. 10-year up 3/32, the yield 0.70%. Gold is down 0.6%, $19.42 the ounce. And West Texas Intermediate crude down 0.2%, $42.15 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, there are a lot of variables for equity investors and risk investors in general to really have to take into the calculus. You've got obviously the pandemic, the impact from the pandemic on the economy. We've now got politics to factor into the equation with the election coming up. A lot to deal with. Let's see how the pros are doing it. For that, we welcome Scott Kuby. He's a senior investment strategist at the Carson Group. He's calling on the phone from Omaha, Nebraska, where they may still play college football this fall. We'll have to see. Scott, thanks so much for joining us here. Let's talk about maybe the economic backdrop that you're envisioning as you think about, the strategy you'd want to employ investing capital here.
Yeah, and thanks just right off the bat for mentioning the state religion, which is our college football team here. That's how important it is. And so, you got me a little emotional right off on the first question there. So economic backdrop we're seeing is really what we had anticipated. A fairly sharp recovery initially as the restrictions for people being able to pursue commerce in the way that they want to do were at least partially restricted. Things shot up. Businesses were open. Probably a couple of them where restrictions were a little bit tight, and that allowed some people to get back to work. And then with the surge in viruses, more heavily in the southern states, but really all over the U.S., where it's continued to clip along at a fairly strong rate, that has slowed down that pace of reopening. That has slowed down the ability of those businesses to rehire, and therefore you're getting some pretty weak retail sales as people aren't going out as often as they might have if the virus had stayed under better control, but also not as many businesses feel like it's worthwhile as well. So the impediments to commerce are still there, and we're expecting a pretty slow climb up until we see some degree of vaccine or at least a much better overall therapeutic in order to support economic growth, where people feel like they can get diagnosed very quickly and healed very quickly. Then maybe the threat isn't as great. Otherwise, we're expecting a pretty slow climb out through here until we hit that period of time where a vaccine might be able to have effect. And I think some of the hard part is even if we get one, how effective will it be, and will it be enough in order to get rid of cases, or is there going to be that constant slow burn of risk out there that you may run into, and that's going to cause people to be very hesitant, and that could mean that we're going to slower economic grind for really a fairly long period of time. That'll be challenging, I think, for the markets and for investors overall.
So, Scott, does that mean that you feel like the best case is priced into markets, or that if something actually goes well, that's not priced in?
Yeah, so I think it's a good example. One of my favorite authors is J.R. Tolkien, and one of the things
oh my gosh, me too, ditto. Yeah. Lord of the Rings or The Hobbit? Decide.
Yes, I'm probably Lord of the Rings.
Yes,
a little bit more than The Hobbit. Okay, so I'm glad we had this. Yeah, this is and so one of the things that he had is in his writing was he called a eucatastrophe, and eu was Greek for good, and so it was something where everything was going terrible, and all of a sudden in comes eagles flying somebody out, or all sorts of different things that would happen within the books. And I think that there's a decent possibility of a U catastrophe here, where we end up with a vaccine a little bit sooner, but way more effective than the market's pricing in, and then all bets are off at that point as far as that the market could really rally. So I don't think we're I like to say we're pricing in. I say the market and investors are looking at with what I call rose-colored binoculars. When you look at binoculars, you're looking farther into the future. You're not paying as much attention to what's going on around you right now, and you're looking through rose-colored lenses, which is to degree a bit of optimism. So I say it's optimistic, but there is always a chance it could turn out way better, in which case stocks would likely rally, and I think especially value stocks, because those are the ones that when you see things get better as far as the potential opportunities for a vaccine, those are the stocks that are getting hit the worst from a COVID world. And so if the odds of that slowing down or disappearing become greater, then I think we see a lot better opportunity within that space. Otherwise, I think you continue to see pretty positive trends within growth stocks, although they're pricing in some pretty optimistic assumptions about where we're going to end up. So not all the way there, but certainly more optimism than we would expect otherwise.
So, Scott, we do have some elections coming up here. Historically, how worried or how do you play that? Or do you ignore it? What's your play there as we go into not just a presidential election, but what could be a very significant one for the Senate as well?
You know, the highest risk thing I say when I go out and speak to Carson Group clients is try to keep your politics out of your portfolio, because it may be your politics may not be in line with what's best for your portfolio, and that's okay, because money isn't everything from that perspective. It isn't even close. But I also want to dose that with some additional reality, which is, during the Obama presidency, the S&P 500 went up 12.31% per year. Since we've had this really great rally out of the lows in March, for the Trump presidency, the stock market is up 15.13% per year. And this is from when they were elected. So the day after the election is when you start doing the calculation. Now, those are both well above historical averages. And obviously, with the Obama presidency going 8 years, that's a great period of time. But if you're pretty politically charged, either to the left or the right, one of those two people is not anywhere close to your favorite president of all time. And yet your portfolio probably did really well during that. And what that tells us is that politics aren't everything, and it's more about business fundamentals, opportunities, growth. And so I think that's the first message I would send is that don't equate your political situation. Now, you may have a really deep feelings one way or the other about immigration, but that probably is not going to be an issue that affects your portfolio over the next 1, 2, or 3 years in a particularly great way. It may be extremely important. It's just not financially as important as some of the other issues. The second piece I would run on that is I'm not sure this election is as major. It certainly is not as major as it could have been. What if, if Senator Sanders had been nominated? Then this would be a crucial election economically about the overall long-term direction of the United States, its relation to capitalism. I think if Senator Warren had been nominated, that would be equally fair as well, or almost as fair. But they weren't. In the end, the former sitting vice president, who was and the vice president is running against an incumbent president. We're not blazing new ground here. We're not talking on the fringes of either party or being nominated. These are the people that are very much solidly in the center of their overall party to a great degree, Biden even more than Trump. And because of that, I just don't see where the delta on this, as far as which candidate wins, is as large as it might normally be, and certainly if Sanders had been nominated.
All right, Scott, really good to catch up with you. You brought in Lord of the Rings, so now you're my favorite. Scott Kuby, Senior Investment Strategist at the Carson Group. But the point is that, Frodo spends like 10 hours of movie going to the mountain to destroy the ring, right? And at the last minute, the Eagles come and take him away. Well, why couldn't the Eagles just take him from Hobbiton and just transport them to the mountain? Like, what's with all this time in between?
Boy, you're asking some deep questions there. Deep questions.
You've never seen it or read it,
I've never seen it or read it.
What? That's bananas.
But I'm sure your Twitter feed will light up now.
The Eagles are coming. That's all you got to know, Paul.
The Eagles are coming. We'll have more coming up on Bloomberg Business Week in just moments. I'm Paul Sweeney with Alex Steele. This is Bloomberg.
a bit of optimism. So I say it's optimistic, but there is always a chance it could turn out way better, in which case stocks would likely rally, and I think especially value stocks.
Third winning week in a row for the S&P 500 index. Down today, though, by half a point. Little changed at the closing bell there. The Dow, as I mentioned, higher, up just about 35 points, higher by 0.1%. NASDAQ down 23 for the NASDAQ Composite Index. That was a drop of 0.2%. 10-year yield 0.70%. Gold down 0.5%, 19.43 the ounce. And West Texas Intermediate crude oil down 0.2%, 42.16 a barrel. First day of trading for Duck Creek Technologies. It's a software provider for insurers. Shares surging today by 48%. Viacom CBS advanced on speculation that an activist investor will push for a shakeup at the company after the death of founder Sumner Redstone this week. Viacom up today by 2.9%. So again, recapping, did turn out to be a winning week on the S&P 500 index. 3 in a row now, up 0.64% on the week. The S&P down today by half a point, little changed, ending the week, heading into the weekend at 33.72. The Dow up 0.1%, NASDAQ down 0.2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like.
Oh, come on, Simone. Shake him, not stir.
Just move on toward your destination.
I can make things move without touching them.
Shaking all over.
Bloomberg Business Week, Movers and Shakers, with Carol Masser and Jason Kelly on Bloomberg Radio.
Paul Sweeney and Alex Steele sitting in for Carol and Jason. And Charlie Pellet was just mentioning one of the stocks I wanted to chat about, Alex. Viacom up, as Charlie was reporting, close to 3% today. The stock's still down 35% year to date. But, you know, Sumner Redstone passed away just a couple of days ago. And now there's already talk about an activist investor getting into this name, maybe itching for change, perhaps including up to a sale of the company. Boy, things move fast.
Yeah, what do you think about that?
I think there's a lot of assets that I think are undervalued. They have not been managed well. There is a new management team that is generally getting some good remarks from analysts and investors, but and maybe they haven't been given enough time to really push it all through, and then this pandemic came. But the real question investors have is Viacom CBS big enough to really compete against the Netflix, the new, bigger and stronger Disney, not to mention some of these technology companies like Google and Facebook and Apple and so on and so forth. And is there a place in what is a quickly evolving media landscape for a company like Viacom CBS? And that's kind of the real question here.
Yeah, I mean, with CBS and their streaming news network, they were kind of above the competition with that. They came out earlier, swinging with that. So who knows?
Yeah.
McKesson. Up by about 4%. So this is like a U.S. government special. President Trump said earlier today that McKesson's going to help distribute the vaccine for the coronavirus, which is, I think, really significant because it's not just about getting the right vaccine. You actually have to make enough and then distribute it. And when we've talked before about the logistics of that, we have infrastructure in developed nations to be able to do that, but you still need distributors. So this is good. This is like, you know, you're thinking of the logistics.
Yeah, and you're right. It's the production and the distribution that is mind-boggling beyond the science of coming up with a vaccine here. So again, I think we're going to see lots of deals, lots of alliances be formed here, and that could be very interesting. I heard there was an IPO today.
A little bit. How about CureVac? How
Wow.
about a 249% pop in your stock? That was my first question to the CEO. The stock hadn't opened yet, but it was indicated to be open anywhere between like $45 and $50. I talked to him earlier, and I was like, hey, did you leave some money on the table? I mean, you priced at the high end of the range, and that was like $16. And he's like, I think we were good. And it's
Yeah,
like, okay.
you know, these biotech companies, I don't know how investors do it. I mean, talk about nerve-wracking. These are, in many cases, hit or miss, particularly these biotech companies. You know, it is a binary situation. The drug either works or it doesn't. And you wait for those tests, and, you know, you think you got the science right. You think you're backing some smart people who maybe have a track record, but you just don't know when it comes down to the science here. And this is interesting because it just shows you the appetite that's out there for potential ways or potential companies that might benefit from a vaccine and how to play it if you're an investor.
Yeah, but you know, like you kind of probably need all the money you can get for all the development. So there was that.
Yeah, so that was fascinating. So anyway, we'll pay attention. I'm sure, I guess there'll probably be some more once a lot of these other biotech companies see what happened here with CureVac. So interesting name. We'll follow that up certainly. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson!
Bloomberg Stocks editor Dave Wilson. I just love that song. I listen
So
to it every
good,
day.
right?
I tune in every time just to hear that little segment here, and to hear Bloomberg Stock of the Day, of course, with Bloomberg Stocks editor Dave Wilson. What do you got for us today?
By the way, Alex, that's Bruce Springsteen in the background. You might have heard of him. 10th Avenue Freeze Out. Just saying, trying to
He lives in Jersey.
Work on your musical education. In any case, let's talk about Sunnova Energy International. It's an installer of rooftop solar power and battery storage systems. The company was founded in 2012, went public in July of last year. The ticker is NOVA, N-O-V-A. Now, Sunnova's initial public offering didn't happen as planned. Rival Sunrun sent a note to investors before the shares were sold that said some of the company's promotional metrics might be misleading. Sunnova ended up cutting the price and the number of shares sold in the IPO. Even so, the stock debuted with a loss of 6% and traded for less than its IPO price until New Year's Eve. Now, this year, Sunnova started with a rally, sank in February and March, and then took off. The stock set a record on Monday at $29.61. That's far above the initial price of $12. Sunnova's largest shareholder, Energy Capital Partners, decided to take advantage of the rally. So did two other private equity firms that own convertible debt, Kayne Anderson and Tortoise Capital. They wanted to sell a total of 8 million shares and ended up selling 10 million, or about 11% stake. So they increased the size of the sale rather than having to cut it, as happened with the IPO. Put it all together, Sunnova's shares responded with their biggest loss in more than 2 months. They dropped almost 14%.
Interesting. So that's one to follow there a little bit. Wow. Bloomberg Stocks editor Dave Wilson, thanks so much with the stock of the day, Nova. So interesting, another headline that just came across, Alex, is SpaceX is said to increase latest funding round to $2 billion. There's a space play.
Yeah, and apparently there was just a lot of strong demand, which just shows that there is a lot of money out there, and their execution has been pretty good. They just had those astronauts return from the International Space Station, and that's sort of commercializing space. You have kind of Elon Musk, the brainchild, but he's not in charge. It's sort of like the perfect world for Elon Musk. Like he can have the big ideas, but there's no execution risk in that respect.
Yeah, exactly, and it's great to see. I kind of grew up as a kid in the space age, the late 60s, early 70s, and it was always so exciting, and certainly I followed along with the shuttle program, so it's just great, just for me, and I think for a lot of other folks too, to see people going back up into space, coming back safely, thinking about maybe what are the next frontiers here. It's always good to have that. I think that I think it's actually now an international kind of effort, which is also nice as well. So good to see Elon Musk with this fantastic company doing just an amazing job here. So SpaceX, they're going to increase their latest funding round to $2 billion. So it seems to be a lot of investor demand for commercialized space, and he's not the only one. There are some others out there as well, Sir Richard Branson. Right now, let's head down to Washington, D.C. We'll get world and national headlines with Nancy Lyons. Nancy.
Thanks so much, Paul. A former FBI lawyer is admitting he altered a document that was part of a broad investigation into Russia's interference in the 2016 election. It's the first criminal charged under an inquiry into whether government officials mishandled that investigation. President Trump today reacted to the news.
He is pleading guilty. Terrible thing. Terrible thing. Fact is, they spied on my campaign and they got caught.
Kevin Kleinsmith altered an email for one warrant to the special court that oversees the Foreign Intelligence Surveillance Act, or FISA. The case involves a lower-level official and does not provide evidence to back up President Trump's claim of spying and that there was a broad conspiracy led by the White House. Former President Barack Obama says President Trump is trying to actively kneecap the Postal Service in order to hurt vote by mail in November. In an interview on the Campaign HQ podcast with his former advisor, David Plouffe, Obama says he cannot understand why Republicans are letting it happen.
what are Republicans doing where you are so scared of people voting that you are now willing to undermine what is part of the basic infrastructure of American life?
President Trump has repeatedly made unfounded claims that mail-in voting is rife with fraud and hurts Republican candidates. His opposition has not stopped most states from expanding their vote-by-mail options for the November election. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Okay, Alex, so stock market bulls, they have been hoping for a coronavirus vaccine, and they're hoping that will extend the S&P 500's 51% recovery from pandemic lows. But Societe Generale thinks that they may be in for disappointment. They're calling for potentially a pullback in the market, and see stocks could fall by 15% by year end. So that's a call you're not hearing out there too much these days.
Well, yeah, and it sort of it raises the question of what's actually priced in, which I feel like we've been trying to, delve into throughout the last couple hours. And I mentioned it earlier, but Goldman Sachs, literally the opposite, says you could hit the S&P 3600 if you're able to maintain U.S. growth and if there is a vaccine, implying that the good news isn't yet priced in. Even big names are kind of like all over the place. There's a great article about Mr. Novogratz saying the stock market bubble is going to pop if Biden wins. Now, most people aren't tying any sort of bubble popping to the elections, but nonetheless, the idea that we are, yes, in a bubble.
Yeah, it's interesting. The Societe Generale call is coming out of the Quant Group from that shop. Solomon Tedessa runs that, and again, calling potentially for losses of about 15% by the end of the year. But I think it's interesting. What has argued, if you listen to a lot of the strategists we have on, Alex, they fall back time and time again to the Federal Reserve, and it's awful difficult to fight the Fed. And I have to admit, that is one of the first lessons I learned back trading stocks back in the 80s is don't fight the Fed, and it's always served me well. And from all the points, and we're going to get the Fed minutes next week, so maybe we'll get another layer of information, but it appears that what we hear from the U.S. Federal Reserve, plus the ECB and others, is accommodative monetary policy for the foreseeable future.
Yeah, and I think the question then becomes, does that actually imply higher yields? Like, if there's accommodative monetary policy, they're buying bonds, the balance sheet necessarily isn't growing, but there's tons of issuance at some point. Do they have to wind up stepping in yet again and increase their balance sheet size past that $7 trillion?
Yeah, it's exactly right. And, Ira Jersey was saying this thing could go to $10 trillion, which is just an extraordinary number. We'll see. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Breaking news and headlines out of Berkshire Hathaway. Let's give you what we've got from the 13F. Berkshire Hathaway reducing its JP Morgan stake in the second quarter. Berkshire Hathaway exiting its Goldman Sachs stake in the second quarter. Also reducing its Wells Fargo and PNC Financial stakes in the second quarter. All of that according to Berkshire's 13F. The Dow, the S&P, NASDAQ, it was a mixed Friday today. Stocks finished mixed after reports showed the economic recovery slowed and stimulus talks reached a stalemate. S&P did have a winning week, 3 in a row, in fact. However, today, down by half a point. Little changed. The Dow Jones Industrial Average up 34, up 0.1%. NASDAQ was down 23, a drop of 0.2%. 10-year up 2/32, yield 0.71%. Gold down 0.5%, 19.44 the ounce. And West Texas Intermediate crude down 0.2%, 42.16 a barrel. Again, repeating our top story, Berkshire Hathaway reducing its JP Morgan stake in the second quarter. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Let's talk bond markets right here. We can do that with our next guest, Brian Chapata, debt markets columnist for Bloomberg Opinion. He joins us on the phone from New York City. Brian, out with a recent column that I thought was really interesting, talking about longtime bull Lacey Hunt. Lacey sees some risk in the marketplace. Tell us about it.
Yeah, so just background with Lacey. He's the chief economist at Boyington Investment Management. Been there for a long time. For the past 3 decades, he's basically called the bull market. Every time there's been a pullback in yields, he said yields are going to fall, that inflation rate and economic growth doesn't support this. So I talked to them a lot, and the real interesting thing sort of came at the end of the conversation. I had to bring up MMT, modern monetary theory, and other ideas about direct monetary financing, and he got really concerned. He said that, there's this risk that if there's a shakeup to how the Fed's liabilities are structured, and rather than just bank reserves, their liabilities are made legal tender, that people are paid directly by the Fed, that it could cause inflation to escalate really quickly if there's just a lot of money flooding the system directly to the people rather than kind of through the banking system.
So, Brian, can you break that down a little bit more? Because some out there would argue that we're already kind of doing MMT, modern monetary theory, where you're actively sort of financing the government. What's the distinction that he's making?
Yeah, so it is a complicated subject, the sort of Fed balance sheet, and there's a question about money printing. Obviously, a lot of people say that colloquially, but the Fed right now is effectively buying treasuries and putting that on the asset side of its balance sheet. And in order to balance the balance sheet, they put bank reserves on the other side of the balance sheet. On the other side of the ledger, it's their liability. And Lacey's argument effectively is that right now the banking system isn't able to utilize those reserves, isn't able to lend that out into the economy to increase the velocity of money, which in turn causes inflation. The money's not turning over. The money's kind of just sitting there in the bank reserves.
And is that the quote-unquote fault of the banks, or is that just kind of the market right now?
Yeah, I think it's probably just the way that the market is, the way that the economy is. The banks aren't going to just lend to anyone. They need to get compensated for the risk that they're taking when they extend loans. And Lacey's argument is that the risk premium on the loans are too high for a lot of people to take advantage of, and there aren't enough productive ways to get that money out into the economy and to spur innovation.
So if we have like real monetization and he sees inflation that could come back really quickly, I'm wondering how he's categorizing inflation, because there has been over the last few years a recurring debate is, are we really calculating inflation correctly, et cetera? And I wondered if he had any thoughts on that.
Yeah, I mean, he mentioned that inflation obviously is a very complex subject, but I think the crux of inflation is where is the wage growth first and foremost, and if wages aren't accelerating, then there's not necessarily that price pressure. But obviously, to your point, I mean, you look at asset prices, for example, and you do see a lot of inflation there. I mean, there's a lot of money being poured into financial markets right now, but it's not quite being reflected in goods and services. And to his point, technology plays a big role, and there's land, labor, and capital, and then you have the production function. And his argument is just that we're not going to see a huge pickup in price growth for various reasons.
Brian, how widely held do you think Lacey Hunt's view is in the marketplace?
I will tell you based on the feedback I got today from my column that a lot of people, it resonates with a lot of people. He has this encyclopedic knowledge of economics. He actually mentioned my econ professor, Robert Gordon at Northwestern, complete coincidence. But you know, he really strikes at a lot of I think the debate right now about creative destruction and just moral hazard and what's happening right now. And I think he raises a great point when you sort of look at what's happening in Japan and other places around the world. There's just you don't have this sustainable growth, and he talks about revolutionary, not evolutionary kind of technological advances, and we're just not seeing those today. Very different TikTok versus the combustible engine, for example.
So, what was the biggest takeaway, like on net not investable level? Like, would he be selling treasuries here? Does he short them? Like, what's the takeaway?
I mean, his fund basically is entirely in 30-year treasuries. So, I mean, his view is that we're going to continue to see low inflation, we're going to continue to see low growth, and for that reason, there's really not necessarily a floor on treasury yields, even though they might seem so low. As far as stocks, we didn't really get into that, but it's hard to know about the financial assets. But his point is, from an economic perspective, that we're going to kind of see this middling growth that we kind of have seen since the 2007, 2008, 2009 financial crisis.
Brian Chapata, thank you so much for joining us. Appreciate it. As always, Brian Chapata, debt markets columnist for Bloomberg Opinion, with a fascinating story on, again, Lacey Hunt, long-time bull here, does see some risk in the marketplace here. And I guess what I hear, Alex, is as you think about the rates, I can't think of an argument why it's just not going to be lower for longer.
Yeah, but and the reason why I asked if he was shorting is because I have to wonder if at some point we're going to get to a more direct MMT, because if you're going to run out of levers to pull, literally do you have to go there in some real capacity?
Yep.
And is inflation going to be the real offset of that? And I wonder, like, when do you seriously have to start considering that?
Yeah, that's going to be interesting to see, and it's we're at low levels now. See how much lower we can go. For those of you listening in New York and San Francisco and watching YouTube, Bloomberg Business Week continues.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week right now. Let's go get a business flash. We can do that with Charlie Pellet. Charlie, what do you have for us?
Well, I got a lot of 13Fs for you after the bell. Berkshire Hathaway adding Barrick Gold to its investments, exiting Goldman Sachs in the second quarter. Again, this according to a 13F analysis by Bloomberg. Berkshire did buy more Bank of America stock after the second quarter ended, while also reducing its stake in J.P. Morgan. Elon Musk's Space Exploration Technologies Corp is close to finalizing $2 billion in new funding after the company increased the size of the round due to strong demand. This is according to sources. Turned out to be a mixed Friday here, an up week, yes, 3 in a row, in fact, for the S&P 500 index. Today, though, S&P lower by half a point, little changed, ending the week at 3372. The Dow Jones Industrial Average up 34, higher by 0.1%. NASDAQ down 23. For NASDAQ, that was a drop of just about 0.2%. Stocks mixed after reports showed the economic recovery slowed and stimulus talks reached a stalemate. As for what is driving U.S. equity markets, Christina Hooper is Chief Global Market Strategist at Invesco Advisors.
I think it is contingent upon what we are already seeing coming from the Fed. That is the number one factor driving stocks right now. Fed generosity, just enormous stimulus coming out of our central bank in the United States, and that doesn't seem to be in danger of stopping anytime soon.
Amazon shares lower today by 0.4%. Amazon is offering Seattle-based employees a choice of smaller offices outside the city, suggesting the COVID-19 outbreak and a new local employers tax have pushed the e-commerce giant to consider alternatives to its hometown. Recapping, equities mixed, the Dow higher, S&P, NASDAQ both lower, S&P down by half a point. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Here's a stock for you, Paul. DraftKings. It has not been a good day. So the online gambling company had a steeper than expected loss. They face a tax issue that could squeeze it even more, and you get shutdowns. Sports aren't happening. So Guy and I earlier on Bloomberg Television spoke to the CEO and chairman of DraftKings, Jason Robbins, earlier, and we talked about how it could possibly survive.
You've got a decent cash buffer at the moment. Are you able to kind of sustain yourself through this period of volatility with so many sports really kind of teetering in terms of whether or not they'll be on or off?
Well, I think that right now we are really benefiting from a lot of pent-up demand in sports. And I think there's a lot of real great work that's been put into planning for sports like the NFL, so we're confident that they have taken the appropriate safety measures and will be able to have a strong season. That said, we feel like we can weather any sort of setback. And if you look at, for example, in June, we were able to grow 20+% year over year, despite the fact that very few sports were being played. The PGA Tour was huge for us. NASCAR and UFC were very good. And we also saw a great uptick in things like esports. So what I think our company has shown is that we can pivot and create different types of offerings and engage customers, and hopefully we won't have to do that as much in the fall, but we're prepared to do so if we need to.
Jason, what's interesting is that there is a narrative in the market that a lot of guys that can't go bet on sports go to Robinhood and they trade stocks instead. Is it a one-for-one game?
Well, I mean, if you look at our numbers from Q2, we had a great quarter. So, it doesn't seem like if that is occurring, it's one for one. We at the top end of our guidance, we really beat consensus substantially. And I think a lot of that came without many major sports at all being played for most of the quarter. So we feel very good that even if there have been other activities that our customers have taken up, that the pent-up demand for sports is real. And especially now that you're seeing the return with baseball and basketball, we're having just huge numbers. NHL, same thing, just record-setting numbers this July.
Jason, the IRS has deemed that entry fees are taxable at the point of entry, and that's going to have a pretty big impact as we work our way through the P&L down to the bottom line. Could you give us your reaction to that potential ruling that Bloomberg is reporting, and what impact it could have on your finances?
Well, yeah, I mean, just to clarify, the IRS has not necessarily deemed that. There was a memo issued, which, you know, for those who have any sort of interaction with large government agencies, there's many memos that get issued, and you know, sometimes they end up having impact. Most of the time, there's a lot more that goes on in the process that really ultimately affects the end. We've been working with the IRS on an audit for years now. You know, we feel it's pretty clear, based not only on our own assessment of the facts and data, but also what dozens of state legislatures and courts around the country have come to the conclusion of, which is daily fantasy sports is clearly skill-based. It's distinct from wagering. There's a federal law called UIGEA that actually clarifies that and says daily fantasy sports is not wagering. So our opinion is that the memo got it wrong, and we look forward to working with the IRS to help educate. And you know, this isn't the first time we've experienced that. I think a lot of times when people are new to our industry, they don't always have all the facts. And you know, generally speaking, if you look historically, it's kind of always led to the same conclusion once the facts are out there, that daily fantasy sports is distinct from wagering.
That was Guy and I talking with DraftKings Chairman CEO Jason Robbins. He sidestepped the IRS question very deftly, because, like, really, I mean, at some point, if you got to pay it, when a lot of these states are literally bleeding cash and need a lot of money, why wouldn't they do that if they could?
Yeah, it's going to be interesting to see how that plays out, and that'll be a key driver for their business model. But it's just, you know, the key for them also is football, NFL football. That's such a big driver of their business, and so the NFL's got to get it right. They got to get back to playing, hopefully on time. It looks like college football, you know, a couple of big conferences have already said no, but a couple of the other ones are still thinking about it. But it's coming back, as I mentioned. You know, it's the NBA is back successful, Major League Baseball successfully coming back for the most part, unless you're St. Louis Cardinals, and maybe not. But it looks like they weathered the storm. And I'm just looking at the stock on the Bloomberg terminal here under the BQ function for a Bloomberg quote, which really gives you everything you need, up 217% year to date. So just extraordinary as investors, you know, kind of bet on sports betting. I'll tell you, in New Jersey, where it is legal, it is big.
Well, yeah, I was going to say, too, though, two things. One is that you had IAG buy a stake in MGM. And so that's very much like a Barry Diller online gaming play. That's part of the reason why they did that. So they may have more competition, which leads me to the second point of, will you have actual tie-ups? Apparently there's an activist investor invested in Playtech, which is a European gaming company that's like, hey, DraftKings, what you doing?
Right, exactly. The growth in this business, again, if you just look at the states that have allowed it, it really is substantial. And you got to think that the trend is their friend, and from that regulatory perspective here. So they seem to be in a pretty good position right here, but they're going to have to watch that tax issue, which you and Guy raised from California, because California leads in a lot of areas, including tax policy. We'll have to see how that plays out for them and for the rest of the industry. Right now, let's head down to Washington, D.C. for world and national headlines with Nancy Lyons. Nancy.
Thanks, Paul. President Trump is blaming Democrats for preventing him from helping those struggling during the pandemic.
I've directed the Secretary of the Treasury to get ready and send direct payments, $3,400 for a family of four, to all Americans. Democrats are holding this up.
Both political parties have supported sending another cash payment to families and individuals, but the sides cannot agree on other aspects of another relief bill, like the price tag. Democrats have said they'd come down $1 trillion to $2 trillion, but Republicans say that's a non-starter. A top official with the United Arab Emirates says the response to a new deal with Israel has been fantastic. UAE Minister of State for Foreign Affairs Anwar Gargash tells Bloomberg one key to the agreement is Israel's pause in annexation.
I would say there were certain, principles of how the Israeli-Palestinian issue would be resolved. Annexation would have changed facts on the ground.
Gargash says he talked with UAE's allies only after the call with President Trump in Israel. Well, the U.S. is pushing the UN Security Council to extend an arms embargo on Iran. Secretary of State Mike Pompeo.
We can't allow the world's biggest state sponsor of terrorism to buy and sell weapons I mean, that's just nuts.
It's expected the U.S. request to prolong the embargo will fail. Sticking to the topic of Iran, the U.S. says it has caught Iran transporting oil to Venezuela in violation of sanctions. 4 tankers carrying over 1 million barrels of petroleum were seized. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Alex, quick question here. What is your favorite pizza topping? And if you say pineapples, our partnership very well may be over.
It's not.
Okay.
Do you judge me if I say black olives?
Oh, that's also not on my list either, but that's a standard one. That's okay. Pepperoni is the most beloved pizza topping. Guess what? There might be a shortage of this thing. The pricing of pepperoni is on the rise. We've had a lot of problems with some of the meat plants, and there's actually also high demand for pizza. So we're looking at this. The price, I'll give you a price. They price it in the pound here. It's gone from $2.87 a pound in January of 2019 to $4.12 now. That's right at the margin for a lot of these pizzerias.
Really?
Yes.
That's a lot.
Yeah.
I also, and there's no market, there's no futures market in pepperoni. Like you can't hedge it.
Pork bellies, maybe. I have no
pork
idea.
bellies. Yeah,
yep.
you could do
So,
that.
I don't know. But it's you think about some of these big chains, they're feeling it. But you think about here, like in the New York metro area, where it's really, literally mom and pop stores operating presumably on pretty thin margins. This could be an issue here.
Well, yeah, I was going to say pork bellies. You got that from trading places. But
yes.
But I think that some of the big guys, they buy on long-term contracts. I think it's going to be the smaller guys that maybe buy more in the spot market, or if they have to supplement some of those long-term contracts with the spot market because there's a lot of demand, that you're probably going to run into some trouble. And really, this is not where you're going to get the margin. Like, you're already going to be struggling for margin anyway. It's not like you have any pricing power, so you're just going to have to eat it, and that's probably going to hurt.
I don't know. I mean, I would think, it seems like pizza's a pretty economical food. Maybe and it's also in high demand here. So we have that function too. People are eating a lot more pizza these days as they're shut in and don't feel like cooking all the time. So, and all the pizza places have the pickup curbside and all that type of stuff. So
here's my question. What is wrong with pineapple on pizza? And I say that because I don't necessarily eat it, but there is the sweet and salty argument to be made.
Yeah, I just can't go there. I mean, I think there's some lines you can't cross with pizza, and I think that is one of them. So pepperoni fine, sausage fine, pineapple not so much.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A mixed Friday, an up week for the U.S. stock market, 3 in a row, in fact. But today, a down day on the S&P, dropping by half a point, little changed, ending the week at 33.72. The Dow up 34. That was a gain of about 0.1%. NASDAQ down 23, a drop there of 0.2%. 10-year up 4/30 seconds with a yield of 0.70%. Gold down 0.5%, 19.44 the ounce. And West Texas Intermediate crude down 0.1%, 42.21 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Boy, when you think about the economic impact on this economy, one of the areas hardest hit has been the travel industry. You know, planes not flying, hotels well below their normal occupancy levels is really brutal. We're now starting to see some rebound, but I think most people feel like it might be a slow rebound. But let's see what's going on in the world of hospitality. We can do that with Jay Stein, Chief Executive Officer of Dream Hotel Group, on the phone from New Jersey. Jay, thanks so much for joining us here. Talk to us about what your hotel group did at the beginning of this pandemic and kind of what you're doing now.
Yeah, very difficult time. We battened down the hatches. We tried to keep the gunpowder dry, and unfortunately had to lay off or furlough, the majority of our employees, figure out what we're going to do with healthcare for them, and just try and survive. We thought it would take a couple of weeks or maybe a month or two, and obviously we're much deeper into it now, and looks like it's going to take a couple of years to get back to normal levels. So our goal is to survive. How do we get through to the other side? And, the new normal was how do you operate and lose less money by being open than by being closed? So that's kind of where we're at the moment.
When I go to one of your hotels that is going to say reopen, what's my experience going to be like? Am I going to be served by robots?
We don't have any robots, but we did look into them for our properties in Hollywood, for the Dream in Hollywood, but we did not opt to go with the robots, so I'm still intrigued by it. But you are going to see a number of different things. I mean, all of our employees will be in masks. All of our employees, and you will be in a mask, required at all of our properties, even though it's not mandated in every state that we operate, but we require it. We have social distancing plaques on the floor of where to stand. We have hand sanitation stations at all the high-touch areas, certainly by every elevator landing. We will not clean your guest room unless you ask for it until you check out. We will leave your guest room vacant for 24 hours after you check out, and then clean it, and then we would occupy another guest. Some of the states where we're in also mandate a maximum amount of occupancy percentage that the hotel is allowed to sell on any given night. Also, the food and beverage is very different in following mandates where you will wear a mask to the seat. Once you're at the seat at the table with your own guests, no more than 10 people, most at a table, you can remove the mask while you're dining. But if you get up to go to the restroom or leave, you need to put your mask back on. So, yeah, a lot of changes.
Jay, give us a sense just broadly, I don't know how much detail you want to disclose, but just kind of where your average occupancy was kind of before the pandemic and kind of where it is now, and how is that the trough, or kind of just give us a sense of that trend?
Yes. I never thought I would say numbers like this. I've been doing this for 35 years, so it's shocking. We, typically in New York, we have 6 properties in New York. We would be running 85-90% occupancy on an annualized basis, and now these properties are down in the 10% range and 20% range. You may be hearing that New York is running higher occupancy percentages, but that's because of the first responder business, which a lot of hotels had at very low rates, but that's starting to go away now. And also the homeless business, which you've probably read about in going into hotels in New York. Some of the homeless are trying to keep COVID levels down. So that's artificially inflated the occupancy percentage. The city's running about 45 right now. But again, if you remove those pieces of business, it's probably more in the teens or lower. And nationally, not much different. We're seeing a little better in our property in Dream and Hollywood, are running higher percentages. We have a Time Hotel up in Nyack, also running higher percentages for different reasons up in those markets. But our property in Nashville and Miami and in Durham, also in the low 20s and in that range. So very different than what they typically are.
Are you noticing, first of all, those are rough numbers, and I wondered if you're noticing anything in terms of the types of hotels you have. Like, would they rather just like a straight up hotel and then they can go do stuff outside, or do they still want that whole spa, fancy pants experience?
Yeah, I think they do want our kind of experience because we tend to have a lot of outdoor spaces, which for people that are looking for some relevance back to some excitement or some chance to go out with friends. So we have a great pool at a few of our different operations. The Dream Downtown here in Manhattan is opening up later next week, which has a great outdoor pool. We've been open for the food and beverage there for a couple of weeks now. We're going to open the hotel part, like I said, by the end of next week. So yeah, guests would like to come and go to our outdoor dining areas, to the outdoor pool areas. I think we're also great service, cleanliness. So going to an upper upscale hotel like figure out how to make sure people feel healthy. They got to get on planes. Once they start getting on planes, there'll be places to stay when they land. So it's pretty generic type of formula here. And the other big part is the corporate business. We really need the corporate business to get going again. As you know, many companies have decided to work from home, and just not great for that's our core business on Monday through Friday.
So Jay, I guess, but based on that, what's your runway like? As in, how long do you have until you're like, oh boy?
Yeah, so that's tough to say. I mean, our chairman and a number of the owners for the different hotels that we manage, are evaluating that all the time. As I said, we tried to keep as much gunpowder dry as we can. We had to lay off a lot of employees, and I think all the properties that we are involved with now that are open or that are getting ready to reopen, we should be able to keep ourselves going at this new structure and at least, lose money at a level that we could keep going for a couple more years if need be. But I don't think it'll be that long. But I think a lot of other hotels that were on the edge before COVID. And as you know, New York has been struggling on driving its rates for hotels for a number of years, and a lot of new hotels have entered the market in New York City. I think you will see a fair amount of hotel rooms coming out of the inventory, which again will help the hotels that make it through to the other side. But I would not be shocked by a 10-20% drop in the inventory in Manhattan.
Interesting. Jay Stein, thank you so much for joining us. I know a very difficult time for those in your industry. We appreciate your thoughts here. Jay Stein, Chief Executive Officer of the Dream Hotel Group, joining us here. And some of those numbers, Alex, are just stunning in terms of occupancy.
Yeah, it's interesting. I mean, I'm a lot more open than I think a lot of my other friends are, but I would even hesitate in terms of the hotel. And I don't have a good reason for it. It's just, and I guess I'm a good example of it, right? Because I'm open, I'm out, I'm back in the office, but I still have weird hangups. And I think that's part of the issue, is that whole confidence level. I don't know how you get around it.
Yeah, it's interesting, and I think Jay made a great point. You got to get people on the planes first, and then we get them on the planes, then they got somewhere they need to stay, and that's kind of how it might play out. So we'll have to watch that. We'll have more coming up. This is Bloomberg.
Well, okay, ladies and gentlemen, time's up for today. Everybody who followed our trades and copied them did really well for today and for a week. Well done to all of you. To the rest, if you're still skeptical about our trading strategy, you need to go back in time and check our history files. You can find them in our playlist SG Trader channel. Let's sum up our weekly profit. Well, on Monday we did well. It was £1,000 profit. Tuesday £400, Wednesday £530, Thursday £900, and Friday £400. Totaling £3,230. As always, I can say that 30% will go to charity. All information you can find on our description. So anybody who wants to support this charity and join us, please do so. We will really appreciate it. Have a great and fantastic weekend. Stay safe, and I'll speak to you all, as always, on Monday from 8 o'clock UK time. Stay safe. Bye.
From Bloomberg World Headquarters, I'm Charlie Pellet. Warren Buffett's Berkshire Hathaway is shifting its investments in banks.